Hey, this is Matt from InvestiQuant. Today is Thursday, February 10, 2022. Yesterday was a strong day in the markets. We saw the markets gap up and take off to the upside and close right up at the highs. So we didn't have a huge range, just 28 points of range in the S&P, but we moved directionally from the open till the close, opening near the lows, closing near the highs, and leaving a gap behind in the process. So we're going to look at that type of pattern this morning. We're going to use a couple different filters to describe it. Let me go ahead and get all four instruments selected here. The setup's based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, the overnight session is pulling back from the close. We're trading just a little bit lower right now at the time of this recording. So I'm going to go to opening filters and add gap down to the gap direction here. This is important for this test. The next thing I'm going to do is describe the action from yesterday. And the way I'm going to do that is yesterday closed up at the highest closing price of the past 10 days. So I'm going to use that filter by going to new highs, day after a 10-day high close. That's also available there in the active today. And then I'm also going to use yesterday had an unfilled up gap. So I can grab that from the active today or from the prior gaps here. I'll grab it from active today. So that is right there, day after unfilled up gap. That means that yesterday's low of day is above the prior day closing price is what that means. So I've got both of those selected. Next, I'm going to go into indicators. Say we closed above a 10 and 200-day simple moving average, and now I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when the prior session is an unfilled up gap that closes at a 10-day high, followed by a gap down. This is all taking place above a 10 and 200-day simple moving average. Historically, we've got 218 samples in the S&P, 182 in the NASDAQ, 222 in the Dow, 154 in the Russell. So nice sample sizes here everywhere. If we look at the win rates on them, S&P fairly strong following that type of pattern. So 63% of those close above the opening print. For the NASDAQ, it is 65%. For the Dow, 59%. For the Russell, 51%. If we look at the average moves, the average loss larger than the average win in the S&P. That is also the case for the other instruments as well. So NASDAQ, Dow, and Russell all have larger average losses. So historically speaking, the moves to the downside have been larger than the moves to the upside following this pattern. But for at least, 3 out of the 4 instruments, it has more often than not closed above the opening print following that 10-day high close with an unfilled up gap. Hopefully you found that helpful. Good luck today. We'll see you next time.